They say the market never changes. The names change, the tickers change, the technology evolves, but the game at its core remains the same. Human nature is the engine that drives the market. Fear and greed, hope and despair. Every generation thinks it's smarter than the last, but the same emotions that moved prices a century ago move them today. That's why certain principles never go out of style. They're not bound to time or technology, they're bound to human behavior. The first principle is discipline. Discipline is the foundation of every great trader's fortune. Without it, you're gambling, not trading. Most people don't lose money because they pick the wrong stock. They lose because they can't control themselves once they're in the trade. They buy because they feel excited, and they sell because they feel afraid. They can't sit tight when they should, and they can't cut loose when it's necessary. Discipline is the ability to act according to your rules, even when your emotions are screaming in the opposite direction. There was a time I believed I could outsmart the market with cleverness alone. I thought if I just studied enough, found the right patterns, I could beat it. But I learned the hard way. Cleverness can make you money for a while, but discipline keeps you in the game. The market is like a mirror. It reflects back every weakness you have. If you're greedy, it will show you greed. If you're fearful, it will expose that too. And it will take your money for every mistake you refuse to correct. The second principle that always works is patience. Most traders lose not because they pick bad stocks, but because they pick good ones at the wrong time, or they don't wait long enough for the market to prove them right. The market doesn't care about your timeline. It moves when it's ready, not when you need it to. I made my biggest profits not by constantly trading, but by sitting on my hands and waiting for the big move to unfold. There's an old saying I lived by. It never was my thinking that made the big money for me. It was always my sitting. You see, people think trading is about constant action. It's not. It's about waiting for the perfect moment to act, and then having the courage to act decisively when that moment comes. The public wants excitement. They crave the thrill of constant trading. But the professional knows that profits are made in silence, in stillness, in waiting. Now, another timeless truth. Never average down on a losing position. This is a trap that ruins even smart traders. The moment you start throwing good money after bad, you've lost control of the game. The market doesn't care how much you've already lost. It only cares where the price is going. If your trade is wrong, get out. Don't argue with the market. The market is never wrong, opinions are. Averaging down is an argument with reality, and reality always wins. When I was younger, I thought I could will the market to move in my favor. I'd hold on to losing positions, convinced I was right and the market was wrong. That arrogance cost me fortunes. Every time, I'd end up learning the same lesson. The first loss is the best loss. It's better to take a small loss and preserve your capital than to let pride destroy your account. The most dangerous emotion in trading isn't fear, it's hope. Hope has ruined more traders than anything else. That leads to another unchanging law. Cut your losses quickly and let your winners run. It sounds simple, but it's the hardest thing to do. Human nature wants to do the opposite. We're eager to take a small profit to feel right and to hold on to a losing trade, hoping it will turn around so we don't have to admit we were wrong. But success in trading requires reversing that instinct. You must learn to be comfortable being uncomfortable. When a trade is working, sit tight and let it work. When it's not, get out fast. The best traders are not those who are always right. They're those who manage their wrongs wisely. One of the greatest realizations I ever had was this: the big money is made in the big swing. The market gives you only a few great opportunities each year, those times when everything aligns and a major trend begins. The amateur tries to catch every little fluctuation, but the professional waits for the tidal wave. A trend, once established, tends to continue. That's a law as old as speculation itself. The trick is not to predict the trend, but to recognize it when it starts, and then have the nerve to stay with it until it ends. Traders love to predict, but prediction is the surest path to ruin. The market doesn't pay for opinions, it pays for correct behavior. You don't need to know what will happen tomorrow. You only need to know what to do when it happens. Forget trying to catch tops and bottoms. Let the market show you its hand, then play accordingly. The idea is not to anticipate the future, but to respond intelligently to the present. Here's another truth that never changes. The market rewards those who understand risk. Most people think in terms of profits. Professionals think in terms of risk. Every trade is a business deal, and in every deal, your first question should be, how much can I lose if I'm wrong? Protect your capital like a general protects his army. Once it's gone, the game is over. The goal is not to make every dollar, it's to stay in the game long enough to take the dollars that matter. When I look back at the times I lost big, it was never because I didn't know enough about the market. It was because I ignored my own rules. You can have the best system, the best instincts, the best timing, but the moment you start breaking your rules, the market will punish you. Your rules are your lifeline. Without them, you're drifting in open water with no compass. One of the hardest lessons to accept is that the market owes you nothing. It doesn't care about your plans, your needs, or your dreams. It doesn't care that you've been losing and deserve a win. The moment you start thinking the market owes you something, you've lost perspective. The market exists to exploit your weaknesses. The only way to survive is to master yourself. Emotional control is the invisible edge. Everyone's looking for some secret formula, some new indicator or system, but the real secret is between your ears. Trading success comes down to managing yourself under pressure. When the market moves against you, can you stay calm and act logically? When it moves in your favor, can you resist the temptation to grab profits too early? Most can't. That's why few succeed. There's an old saying, the game of speculation is the most uniformly fascinating game in the world, but it's not a game for the stupid, the lazy, or the emotional. It requires study, patience, and self-control. And even then, it will test you to your limits. You'll make mistakes. You'll lose. But if you learn from every loss, you'll grow stronger. Every mistake contains a lesson if you're humble enough to see it. I've seen traders blow fortunes because they couldn't admit when they were wrong. Pride is poison in this game. You have to be willing to say, I was wrong, and move on. The market rewards flexibility, not stubbornness. Adapt or die, that's the law of survival in speculation. Another principle that always works is the law of confirmation. Don't trade on tips, rumors, or opinions, yours or anyone else's. Let the market itself confirm your idea. If you think a stock should go up, wait until it actually starts going up before you buy it. The tape tells the truth. The market speaks in price action, and that language never lies. Listen to it. Don't try to outtalk it. People often ask what separates professionals from amateurs. The answer is simple. Amateurs trade to be right. Professionals trade to make money. Being right is an ego need. Making money is a business decision. In trading, your ego is your enemy. The market doesn't reward your opinions, it rewards your discipline. I remember one year when everything I touched turned to gold. My confidence grew, and soon, confidence became arrogance. I thought I could do no wrong. That's when the market humbled me. Overconfidence blinds you. You start breaking your rules because you feel invincible. Then, when the tide turns, you find yourself trapped in positions you never should have taken. Every trader will face this moment when success tempts you to overreach. Don't fall for it. The market punishes hubris without mercy. You must also understand the importance of keeping records. A trader's notebook is his mirror. Write down every trade, why you took it, how you felt, how it ended. Over time, you'll begin to see patterns, not in the market, but in yourself. You'll see how fear made you sell too soon, or how greed made you hold too long. That self-awareness is priceless. The market doesn't change, but you can. And that's your greatest weapon. Never trade for excitement. Trade for consistency. The market isn't meant to entertain you, it's meant to reward discipline. The minute you start trading for thrills, you're finished. There's no room for emotion in speculation. You must become almost mechanical, detached. Feelings will betray you. The market will seduce you with hope and frighten you with fear. Learn to see through both illusions. Here's a truth few want to hear. Not every day is a trading day. There are times when the best thing you can do is nothing. Waiting is a position too. The amateur feels compelled to trade daily. The professional waits for the market to show its hand. When conditions are unclear, stay out. Preservation of capital is victory. The opportunity of a lifetime comes around often enough if you have the patience to wait for it.